Hi everyone, Edu-vestor here, the channel that brings you educational research with no bullshit. As this is the first time I'm making a YouTube video, really hope you can support and comment below on how can I improve further. Please be reminded that this is not an investment advice. I do own C Limited and may be biased in my view. Do always do your own due diligence as no one cares about your money more than you do. C share price has went to the moon and you have seen many articles praising the execution of the company. As the price dropped down sharply in the last 2 months, the very same bulls became bears. The point here is that narrative changes very fast with stock price. Therefore, we should always exercise our independent thinking, focus on the quality of the company, the value, and not the price. One of the common bear case against C is its negative P&L. I feel strongly that loss making does not necessarily mean it's a bad or good investment, and this is the very purpose of this sharing. I'll be doing up 2 videos. This current one will be on the deep dive of C business model focusing on Shopee. If you are keen to hear more, please comment below and I will do another video to address the loss making aspect. C Limited is very much like the Alibaba and Tencent of Southeast Asia. Its gaming platform Garena is both a game developer as well as a publisher. Its self-developed game Free Fire was a big hit that topped the charts for years around the world. A Canadian studio, Phoenix Lab, known for its RPG game Dauntless, was acquired by C. On the publishing side, Garena has rights of refusal to distribute Tencent's mobile and PC games in Indonesia, Taiwan, Thailand, Philippines, Malaysia, and Singapore. It's a 5-year arrangement between 2018 and ending in 2023. The key thing to note here is that the top 5 games account for 95% of Garena revenue, and majority were from Free Fire. In other words, there's heavy concentration risk in relying on one or few games to bring in the bulk. Secondly, we have Shopee, one of the top e-commerce platforms with 134% revenue growth. This is an astonishing growth rate and deserves more deep dive into later. The third business is financial services that provides payment and lending solutions as a fintech. On top of its 3 operating businesses, there are 2 new departments. C Capital is formed out of a recent acquisition of Composite Capital. Similar to Tencent, C looks towards investing early in the next big thing, which can potentially generate high alpha and form part of the C ecosystem. C Capital is being run by CIO David Ma, whom Forrest knew for many years and is also a shareholder of C. David was the former partner of Hill House Capital, a firm known for managing at least 6 out of the 10 wealthiest universities in US, such as Princeton and MIT. Also, the C AI Lab was set up to develop AI capabilities. I don't think we have much info on this as of yet. Now that we know what C Limited does, we shall deep dive into its top line by business and geographies. Do note that both tables are stacked by percentage of contribution to 2020 revenue, and you can see the absolute numbers on the chart. Turning to table 1, Garena has 5x its revenue, but Shopee is even more incredible by overtaking Garena as the top revenue contributor. The company growth is powered by its 2 engines. If you turn to table 2, you can see tremendous growth across Southeast Asia, the traditional starting ground of the company. On top of that, Latin America had huge uptake across its gaming and e-commerce franchise. The region now accounts for 18% of the top line for almost nothing in 2018. Putting the 2 tables together, revenue has strong growth in e-commerce and gaming across C and Latin America. Both the business and geographies targeted by C Limited are riding on secular tailwinds. I will continue to monitor the management execution ability in capturing these opportunities. This would mean having to follow its results announcement, earnings call, and using external resources to track the operating metrics prior to official results. I want to stress the importance of reading the earnings call as it contains prospective information which is more important than historical info inside the financial statements. Taking a step back, I want to reiterate that our focus will be on Shopee, given its high growth and significant reinvestment back into the e-commerce platform that brought about the negative operating profits. Today, Southeast Asia and Taiwan are considered core and mature markets, while Brazil is a new market that showed great upside. Management term entry into Poland, France, Spain, and India as test markets. There are many good resources online that you can use to track the progresses in these markets, such as number of sellers onboarded or number of downloads. I may cover when and how to track these numbers in future if there's interest. We will now move one level down from the top line figures to its revenue drivers. There are altogether 5 of them. The first is the commission paid by seller to Shopee for every transaction completed. For example, Shopee earns 5% of the sale value when a seller completed a sale of game videos after deducting the discount given, if any. I would like to highlight the two different business models for e-commerce players. 3P will mean having third parties on the platform as sellers. The sales of goods will take place directly between buyer and seller, while Shopee will earn a commission without having to own the goods. 1P involves owning the goods and selling directly to consumers. Therefore, 3P will be more profitable and not having to run inventory risk. There are much more nuances between the two, and it can be a topic of its own. Please let me know if you want me to do a video just on this. For your info, Shopee has 73% of its e-commerce revenue from 3P and 27% from 1P as of 2020. The second driver is advertising fees. Sellers can use paid ads to drive traffic to their listing. Management shared that the driver is still at its early stage of monetization and will be a key push from now. I believe this is an important aspect to elevate Shopee back to profitability. The other drivers are logistics services and loyalty program. Do note that sales incentive has been deducted off and not considered as revenue to Shopee. If the incentive is greater than revenue, the excess will actually be booked under sales and marketing expenses. You might wonder why is this important. These nuances are key when we compare the financial ratios across companies and determine what's the multiple we select for our valuation models. These are the key operating metrics that you can find in C presentation deck. Table 1 shows the growth in order received on Shopee, reflecting the activity on the platform. Table 2 tells you the GMV, which is sales value of the goods sold. This is important as commission is charged on GMV. Comparing 1 and 2, you will see that GMV grew at a slower pace than gross order, which tells us that average order value has actually declined. I believe the current number is around about $10 to $12 per order. Management shared that low to mid double digits is actually pretty reasonable for the markets they operate in. Also, the decline is due to growth markets like Indonesia and Philippines, which has lower basket size while accounting for a larger proportion of Shopee business as Shopee grows in these places. Table 3 informs us that monetization efforts have increased as growth in revenue is higher than order as well as the GMV. This means more commission is earned via the 5 drivers we covered earlier, and is aligned to the management view that the business model can be profitable. In the recent Alibaba Investor Day, we see how Shopee ranked against competitors by MAU and GMV, showing you the quality of the business given that Lazada is the biggest competitor of Shopee in Southeast Asia. It is interesting to note that Shopee is 2.7 times larger despite being a latecomer to the industry. Lazada has set a target of 100 billion. There's no timeline given, but I will keep a lookout if Alibaba will invest more and focus on its Southeast Asia business. This may potentially mean an increase in competitive pressure faced by Shopee. A recent article showed that Shopee revenue has almost reached the level of Alibaba international e-commerce excluding China. This further indicates that competition is likely to heat up. We have to track the operating metric of Shopee closely to ensure they continue to execute. For example, the projected industry-wide GMV growth is likely to decline to 27% compared to what Shopee is currently doing at 81%. Ideally, I would want to see Shopee growing more than 27% at least, which means having to win market share from competitors. We have come to the second part of the sharing. The top line of Sea Limited had a huge growth, but net income loss continues to widen due to aggressive reinvestment back to its gaming as well as its e-commerce business. In other words, you can say that the profits of Garena is subsidizing the growth of the other two. We can understand the extent of the loss if we zoom into the unit economics of Shopee. All the numbers you see on the screen can be found in the company's presentation deck or financial statements. Using 2020 figures, there are 2.82 orders completed with a sale value of $35.4 billion. We can deduce that each customer is spending about $12.60, of which the commission from seller to Shopee is only 77 cents, thereby resulting in a loss of 46 cents for each order to Shopee. This would tell us that the more you sell, the higher loss Shopee will incur. This explains why revenue will keep increasing while net income continues to widen. You will definitely be worried seeing the widening loss and wonder if the management has a plan in mind. This interview with the CEO in 2020 gave us some good insights. Forrest Lee mentioned about channeling profits from Garena into Shopee and C-Money. That is what we saw in the numbers just now. He also shared that Taiwan is already profitable as a mature market. I want to add that management has announced that Malaysia is also profitable on the Q2 2021 earnings call. This is very important as it shows that the current business model can be profitable with time and scale, and profits from mature markets can reduce the pressure on Garena. This will mean that the cash generator will not just be the gaming side, but also come from Shopee directly itself. An even more important point is his claim that Shopee can turn profitable anytime. The company is not losing money the company is not profitable by choice, and they will continue to floor the pedal in reinvesting profits back into the business to tap on the growth runway. You will therefore probably not expect profits at company level soon, and holding a long-term view to this investment is really key. As responsible investors, let's not just take management's words at its surface. Let's make a good sense of its numbers. Is Shopee really loss-making by choice? You saw the current commission and loss per order in the previous slide of 77 cents and 46 cents. This means the commission required to break even would be at $1.23 per order. If we divide this $1.23 against the order value of $12.60 in the previous slide, that would translate to a commission of 10%. If you compare the take rate of competitors, 10% does not look impossible as mature players like eBay and Amazon are charging at 10 to 12%. No doubt that seller behavior differ across markets, but this gives us a rough sense that profitability for Shopee is possible years down the road. The finding of this slide, together with the management sharing that Taiwan and Malaysia are now profitable, give me more confidence in the viability of the business model. To prevent overextending this video, I shall stop here. I'm thinking of covering the following factors in the next video. I really hope you can like and subscribe to encourage my first attempt and to push me on to make more better videos. Thank you very much.